Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, November 4th, 2009. Well, folks, the market is to the upside today with a nice gain across the boards. The Dow is up about 115 points, NASDAQ up about 12, and S&P 500 up 9.5. Now, the real catalyst today, which has caused the markets to move to the upside, of course, as we always say, is the dollar. The dollar is weaker today, just like how it gapped up yesterday and caused the markets to gap down but faded the rest of the day, keeping the markets propped up. That's the same type of kind of analysis that you're seeing today. As the dollar has fallen throughout the day, you've seen the markets come in quite substantially, and then over the last hour and a half, the dollar has gotten a small gain, and you can see the markets have come down ever so slightly into this trend line. Now, the key trend lines are working amazingly well, folks. We've had multiple scalping opportunities today in the chat room. Again, many of you are in the chat room. That's fantastic. Again, the chat room is geared towards the intraday traders and those of you that just want to learn as we give play-by-play analysis, our methodology, teach, call, guide, you name it, in the markets. That is done in the intraday stock chat. We have people in there that have just been in there for an hour a day. We have people in there that are in there all day long. Doesn't really matter. It's still an amazing value. Now, the key here with today's scalping opportunities, folks, the first one was called out on the first candle of the day. Why? Because the market gapped up, and right away I recognized the fact that this was a key resistance. These lines were on the charts already before today. They actually scanned back as much as weeks to months, and it happened to be that we were just gapping right here. We pushed right into this green trend line, initiating a short call based on the hit of a resistance point. The market fell all the way back down. Where do you move out? Right here at the blue line. At that blue line, you have support. That can be a long play. You pierce the blue line and then start to rally. Remember, second hit of a trend line is not another shorting or going long opportunity. First hits only. That's the methodology that you have to understand. Sure enough, that works perfectly as the market races higher. Where do we go? Right up to the yellow trend line. That's your shorting opportunity number 2 today. So 2 shorts, 1 long right there so far, and you can see the market just fade all the way off of that, coming, where does it go? Right back to the green trend line. At that point, you get a little bit of a bounce. So again, you can scalp left and right in every which way here in the markets and really utilize it to make a lot of money here, considering we're waiting on the Fed at 2:15 p.m. Eastern Time. Now, the market gapping higher. Why is it gapping higher? Well, as I mentioned, the dollar is weaker today. The UUP, which is the dollar index, look at this gap down today, and overall you can see initially the dollar fell very quickly. That's what caused the big spike up, and then since then the dollar has slowly caught a bid going sideways. Again, you could look at this as slightly a bear flag pattern in spirit of, but as it went sideways to up, the markets have come in. So again, sharp drop in the UUP, which is the dollar, that caused the big spike up, and this is the market. Look, this is what the market looks like, right? See how it's opposite? You have a sharp down move, sharp up move in the markets, and then slow fade on the markets, which is coinciding with a slow gain on the dollar. And I'll show you the SPY again. And there it is. Look at that. Sharp up move and then slow fade. Same chart. So you can see how it's really opposite of the dollar. It continues to be a dollar-driven market. I mean, any which way you talk about it, this is what it is. The markets will continue to go the opposite way of the dollar. Now, what do you know about today? Well, the media is going to tell you out there that it was the ADP jobs number that got the markets off on the running start. Again, that's what the media has to find. Remember, the media needs a reason. The media just can't stand there and say to you, well, the dollar's falling today again, therefore the markets are up. They need reasons. They know that they have to report news, therefore they're going to link it to something. So the ADP jobs number came out at 8:15 p.m. Eastern today. It basically came in line with expectations at about a loss of 203,000 for the last month on jobs, those private sector jobs. Now, the key is, again, we had a little ISM news at 10 o'clock. That was really not a big deal either. It came in about in line. Then you had oil inventories at 10:30. Oil inventories initially jumped very quickly to the upside, and since then have actually rolled over pretty substantially on oil. Here's your intraday USO chart. So you can see here oil inventories come out, big pop, and then as soon as the pop happens, you roll over, bear flag pattern in spirit of bear flag, perfect bear flag. Look at this perfect bear flag hugging the 20, and then the rollover, where does it go? Right to the 50 moving average. Beautiful little intraday analysis there on a bear flag pattern, how it rolls over beautifully. Now, again, going back to the SPY, so you can see, again, the markets have gone up. We went right up to this level. You actually closed above it, but those of you that are in the research center and in the chat room know that you have to wait for confirmation. You did not get confirmation there. And again, this is all our methodology. This is what we teach in the research center and in the chat room, folks. And those of you that have been with us for a long time, you are making the strides that to become a pro trader, a pro swing trader, a pro investor, where you're not going to make the same silly mistakes that so many out there make. For instance, right here, here, many people would have gone long right there. Why? Because it closed above the trend line, but you don't have confirmation. That's purposely done. Computer programs read that stuff, folks. Remember, Goldman Sachs, their flash trading programs, you name it, they're on top of that to try to get you in that trade so they can just yank your money out from under you and take it away. You got to understand how to maneuver yourself through this market. The methodology is sound and it works. Bottom line. So again, here you can see the market fading off. No confirmation. In fact, you get a nice reversal candle. We obviously knew this was a shorting opportunity right up here based on the fact that you were into that resistance. The market just cascades all the way back down. Where does it go? Right back to the green trend line in the 20 moving average, gets a small bounce, and then fades right back here. The markets have essentially gone to sleep. Volume is extremely light ahead of the Federal Reserve. Remember, the Federal Reserve, the FOMC policy statement will be out at 2:15 p.m. Eastern Time. Once you get that, you will get a surge in volume, and it's really a matter of what their comments are. They're not going to tell you they're going to change rates one way or the other. They're not going to do that. They're not going to change rates. They're not going to hike rates, even though they probably should to curb off some future inflationary pressures. But bottom line, they're going to keep rates the same. But it's all about their statement. What are they going to say in that statement? How is it going to affect the dollar? Because that's going to be, from what I've seen today, folks, and what I've seen for the last 6 to 8 months, that is going to be everything. You're going to see whether or not this market goes up or down based on where the dollar goes off that Federal Reserve statement. So watch that. Watch the volume flow, and you will get a pop in volume. And the big question is going to be, is this market going to collapse back down towards gap fill? There's some key levels down here of support. All these levels right down. This will be a major level right here, actually, that I'm just seeing right now. That'll be a major level to watch. Why? Because you have this trend line sloping up in blue. You also have the 200, the 50, and this yellow trend line right here. That'll be a major level there at about 104.95, 105. If you get through that, you're going to go to gap fill at 104.70. Now, again, I did initiate a position today. The chat room and the Swing Research Center knows it. I won't reveal it what it was, whether it was long, short, or left or right, or whatever it was. I will not reveal that in this free video. You got to sign up to get that information, but I'm already in the money on it. It's safe to say it was a very, very great entry, really near the highs of the day on the market where I entered that perfectly, obviously right there, up about 15-20 cents on a $6 stock or ETF already. All right, so again, join the Research Center, folks. We look forward to having you aboard. Really, it's time to start taking advantage of what this is. Again, for $49.99 a month, it's the biggest no-brainer ever. Again, you can see here even the hidden gems today is up today, having a nice little up day as well with the markets. And again, the markets are just on hold now until we get that Federal Reserve statement at 2:15 p.m. Eastern Time. Have a wonderful rest of the day. We'll be back in the evening video for our premium subscribers. Again, 40 minutes in length of hardcore technicals, giving projections, giving guidance. That will be in the Research Center this evening, as it always is every weeknight. Take care.